Hello everyone, it's Davide here. Welcome back to Learning Finance. In today's video, guys, I'm going to talk about Ford, okay? So ticker symbol F, which has released the new vehicle, okay? The new Ford Bronco just on Monday, okay? So 2 days ago. And now, there is a lot of enthusiasm behind this new version of the Ford Bronco, and the stock just went up, okay, during those days. There is a lot of enthusiasm and positivity, so it's kind of normal to ask ourselves, well, the stock is still cheap, okay, so it's time to buy, it's a good investment, okay, so I'm going to do a fundamental analysis and valuation of the company, okay, so to try to answer this question. Leave me a like if you find this video interesting. You're gonna help me to grow the channel and reach more people, and subscribe to the channel. Let's begin. Alright guys, so here is the new Ford Bronco, the new vehicle. We can see that it is a new representation of an old version, which was this one. And it's an off-road vehicle. There is also the SUV version, and well, it's quite positive because there is a lot of enthusiasm behind this new car, and they are pushing it in many journals and car pages. This kind of enthusiasm is like telling us, well, probably they're gonna beat expectations, okay, with this new car. So it could be a great investment. Well, let's take a look, okay? Now, this is the geographic business area of Ford, okay? So to understand the company, we have to understand the business. And we understand that 68% of Ford's revenues are from the US, okay? So it's a US company that makes the most of their money in the US, okay? The 20% is from Europe, 5% is from Pacific Asia, and 3% is from South America, and China and Middle East and Africa, they have a chunk of 2% each, okay? So 68% in US and 20% in Europe, it's telling us, well, usually US people, they like those kind of big cars, okay, and in Europe as well, because we buy a lot of, for example, Jeeps and Land Rovers. So Ford, this new vehicle, can be a competitor. So overall, the demand for it and the enthusiasm for it looks pretty interesting. Now let's take a look at the company, if it looks interesting or not, okay? So here we can see Ford revenues, okay, so back from 2007 until today, and two expectations, okay, so two estimates. In terms of revenues, we can see that in 2007 Ford made $170.5 billion in sales, okay? And of course, the financial crisis hit and Ford has been hit, okay? Now 2008, 2009, and since 2010, we have this sort of recovery with a new cycle. Now, bear in mind, in this new economic cycle from 2010 to now, this kind of pandemic stuff that we are having right now, Ford has never been able to reach previous levels of sales and revenues, okay? You know, when you want to buy a company, you always want to buy something that it's growing, it's developing at least, okay? Now, in terms of Ford, we have a Ford right now that has not reached the levels of 15 years ago, okay? So this is the first alarm that we have to keep in mind. Just to make you understand, Ford, since 2011 to 2019, has done a shy 15% cumulative, okay? So not per year, but altogether 15%. Now, there are companies that they make 7, 8, 10% every year, okay? So when you go to accumulate that, it's a lot more. So that's not probably something that you like when you want to invest in a company long term, okay? You want something that grows more. Now, let's take a look at net income. And what we can see from here is that Ford net income are basically quite random. There is not a big stability. It's a lot volatile. They are all over the places, and in 2019 they basically worked to get a break even because they just realized a $47 million in net income, okay? What we don't like about that, or personally what I don't like about that, is that there is not a pattern, okay? It's not consistent. You cannot say, okay, that's what they do, that's what they earn. I like that because one year can be extremely high and the next year 2 years later can be near to zero. Okay, so this kind of volatility in net income and margins, it's something that I don't like much. Now, as always, let's take a quick look at the balance sheet. Okay, so to understand the financial condition of Ford. We understand that in 2019, the revenues were $155.9 billion. The cost of revenue $134.69 billion, and that gives us a gross profit of $21.2 billion, which the gross margin around 13.60%. That for the automotive business, it's even positive. Okay, it's not bad. Anyway, the problem in 2019 has been when it comes to operating income and net income, okay? Because a lot of expenses. We have an operating income that's basically $574 million. And the net income here is just $47 million, okay? When we see the net margin in 2019 has been 0.03%, which is absolutely ridiculous. Okay, it's not something that you want to see in a company like that. Basically, they worked to get a break even. They didn't make any money. That's what they did out of $155.9 billion, which is a huge number. Now, when we look at the history of the net margin, we see that from 2010, it was kind of great, okay, always on average it was around 6%, but you see this trend is going down, and that's something that you don't want to see in a company, because they are increasing revenues not too much and the net margin is going down, meaning that overall Ford can make always less and less and less and less money if they continue like that. Okay, so look at this trend. When usually we want to see something that it's positive trend, okay, a positive trend in net income margin. But in that case, we went from an average of 6% to now look at that. The last 3-4 years has been a continued decreasing. Now we are on basically negative, okay? Now, why is that? Usually that happens, and I'm gonna show you later on what's the situation, when the company takes too much debt, okay? So at the end of the cycle, when you have paid the debt and the expenses to work with that capital, well, there is nothing left for you. That's why. And personally, I don't find this very healthy. When it comes to see the balance sheet, we realize that though the situation is not very bad when it comes to current ratios and total ratios. We can see that the current assets are $124.27 billion. The current liabilities are way less, $94.4 billion, and so that the current ratio is way above 1, and that's positive, okay, 1.32, meaning that Ford can live the next year without problems, okay, so that's positive. I like that. When it comes to the total ratio, we have that the total ratio is as well above 1.13, and that's not bad too. The stockholders' equity, which is total assets minus total liabilities from the balance sheet, is around $30 billion, okay, $29.69 billion. Now here it comes the problem that I was telling you before. Why? When we see the debt to equity ratios and the net debt to equity ratios, those two numbers are tremendous, okay, way higher. I don't like that. We have a debt to equity ratio of 568.03%, which is huge. And we say, okay, let's deduct the net cash and cash equivalents to see what we have. And it's huge as well, okay? It's like nothing changes, because the net debt to equity ratio is 475.97%. The net debt in Ford balance sheet is $141.35 billion, okay, which is a huge number. This company has more debt, for example, that Carnival Cruise has more debt than Delta Airlines. So if you find those companies risky, well, Ford is even worse, okay? The current ratio is quite high, so I'm not telling you that they are going to go bankrupt, but you just have to keep in mind that this is real. And when it comes to taking the net income, it brings them away a lot, okay? We saw that out of 155.9 billion, they have been able to do only $47 million, and this is mainly explained because of the huge amount of debt that they have, and also the decreasing trend in the net income margins. So the question here is, will they be able to repay this debt, to kind of reduce the debt in their balance sheet, so to improve the efficiency of the business? This is the main question with Ford. The market cap right now is $25.29 billion, and the book to value is below 1, okay, so 0.85. Now, when it comes to the valuation, guys, usually I do different scenarios, and in this case I just took the analysts one, and I'm gonna show you why is that. Because when we do the discounted free cash flows, well, analysts are saying that the estimates in revenues are this, so $113.11 billion in 2020 and 134.49 in 2021. Okay, so this is the result of this pandemic stuff. So they are saying, well, Ford is gonna have minus 6.13 billion in loss this year and minus 1.05 loss in 2021, okay, estimates, and a bounce back, a recovery from 2022, 1.4 billion, 6.04 billion and 7.2 billion dollars in free cash flows. Okay, now the requirements are an 8% WACC. Okay, WACC, I don't know how do you want to pronounce it, so 8% discount rate, and the perpetual growth 2.60, which is basically as the US economy, even a little bit lower, because as I told you, Ford growth is very, very low. Okay, so you don't want to keep that too high, otherwise it doesn't make sense. Now, when we do this valuation, the first thing we see is kind of positive, okay, because even with these kind of losses, we get at today's company valuation of $100.79 billion, okay, and we divide that by the total amount of shares outstanding, and we get a fair price of $25.78 per shares, okay, and that's positive. You say, wow, today the company is trading at 6, well, is way undervalued, I'm gonna buy it. Well, be careful, because as I told you, Ford has $141.35 billion in net debt, and we cannot avoid to consider this. This is huge, and we have to keep that in mind. So when we deduct the net debt from this valuation, well, this is what we get, a negative company value. Okay, so actually the fair price of Ford is negative. Now, how that is possible? Of course, the stock price cannot go negative, okay, but this is to make you understand the level of debt that Ford has. And this is why, in terms of fundamental valuation itself, it doesn't make sense to buy Ford when you account for the debt that they have. It's like, okay, I want you to give me money to bear your risk. This is what it is. With the discounted free cash flows, we are not actually able to give a value to Ford. Anyway, Ford still has a value, because they have assets and they have a brand. Okay, so we have to understand what this value is, and how we do that with the book to value price. And we realize that the book to value price is $7.60 per share. Okay, so it's like Ford is trading a little bit lower. And how do we understand that? We understand that from the balance sheet. Okay, we say that the book to value is below 1. And we say, well, if the book to value is 1, so if the company has the value of the balance sheet at least, what is this price? So we take the stockholders' equity, $29.69 billion, and we divide it by 3.9 billion shares outstanding, okay, and that's what we get, 7.60. So is Ford a good investment for the future, okay, for the long term, well, guys, in my opinion, I will not put any money into Ford because it is not a healthy company that I say, well, it's gonna grow no matter what, okay? It's not something that I say I'm gonna put my money here and take them back in 7 years, 8 years, and I know already that they're gonna be more. This is not this kind of company, and I'm gonna show you something. The graph, okay, so this is the stock price of Ford, and we can see that how from 2013, actually, if you look at the S&P, this has been probably one of the best bull periods ever, from 2013 to 2019, now before this pandemic. And look at what Ford has done, okay? So now you say, well, you know what, you go back in 2013 and you say, I'm gonna invest in Ford. You have the stock market that skyrocket, and basically what you have done, you lost money, okay? You lost 60% in the stock. So the risk with this kind of company is to remain stuck in a trap, okay? To remain stuck, to buy the wrong price and remain stuck in a company that basically doesn't grow, doesn't make any money, and increases the debt as crazy as we see here, okay? So in my opinion, I prefer to buy all the stocks. And if you want to, I don't know, you say, I want to run the enthusiasm, I want to speculate on this new vehicle, just do whatever you want. In my opinion, I stay away from Ford. You can go higher, okay, but there is also a cost of opportunity, okay? There are better companies out there which I know for sure that they can grow more and they can have a better performance. So I hope you find this video interesting, guys, and leave me a like and leave me a comment below. Tell me if you own Ford stocks or if you like it or not, okay? Subscribe to the channel, and as always, have a wonderful day.